Hello everyone, this is Max. You're watching EquityMatch online live pitch events. Today, as always, we have four great founders and one investor guest. To cut this short, let me introduce our investor guest, Nelson. Thank you so much for coming. And before
Absolutely,
moving
my
to
pleasure.
our four
Thank you.
founders, if you want to give a short introduction to yourself, Nelson, so we move to our founders. Thank you.
Very good. So, hi everybody. My name is Nelson. Really appreciate you for the invitation, Massimiliano. You guys in Equity Match really are able to put forward every time really cool startups. So, to make it short as well, my name is Nelson. I've been in the innovation, investment, capital, startup space for the past 16 years. In a lot of ventures and corporations. I would say where I've spent most of my time as an advisor to accelerators, to funds, to startups as well, in the blockchain and AI space more recently. And yeah, I love devoting my time to startups and innovation, whether it's investing my own time as an advisor or my capital to also help propel them forward. And I'm really excited to get to know these four startups today. So it's not about me, it's about them. That's what I got to say, and I hope to connect after this. Thank you.
Thank you so much, Nelson. We really
Appreciate you.
appreciate coming to us and share your knowledge. Let me move to our founders. So today we have Nathan McFarlane, Anders Devon, Steve Taber, and Pina Bazar. So we start with Nathan McFarlane. Founder and CEO of Clipsy. Clipsy is scored in Dubai, UAE. Social networking platform is the sector. It's a seed of $500,000 in USD. How's it going, Nathan?
Very good, thank you. I'm really happy to be here and really looking forward to sharing what
Please,
I've been up to.
let's go.
Yeah, so quick thing about myself. I'm here, the founder of and here to obviously give you guys a lowdown on what we've been doing. My background's mainly been in technology and finance. Went viral on social media, and then from there, I realized quite quickly we needed to build something and create a new economy which was more fair to the people, and that's what we decided to do with Clipsy. So let's give it a go. Basically, what I found after being a content creator was realistically the whole system was built against creators, and as we were discussing earlier prior to this, actually the whole financial system is built against the people, more towards corporations, and it's done that by design through the existing American financial system. And it's built to extract value away from the people to the corporations, and whether that be through what we buy, what we see to purchase, and the whole system moves away from the people. We wanted to build a system which could counteract that fact. In the reality, the market is valuable but broken in itself. The existing social commerce system is a leaky bucket system where the value is extracted and the loyalty to platforms is very low. With Clipsy solution, we combine commerce, social media, and digital wallets all into one place, where we have a specific closed loop system. So when we talk about the existing financial system, the open market economy, inverted commas, is built to extract value from the people to take money back to the American corporations, which are owned by the American asset managers, which are owned by the American banks, and essentially extract the value from the people, but utilizing closed loop systems where we can provide the value where the attention of the user is, where the expenditure of the user is, and where the value is, rather than being extracted away from communities, given back to communities to then spend inside that existing system. Typical systems in themselves would have less value due to this because, as I said before, with social commerce platforms, the value is very much driven by a pay-and-play system, whatever's most economical, moving from one place to another, where we create a system where people are incentivized to stay inside the system, spend inside the system, create inside the system, and then in turn spend inside the system and have build value from that. We combine everything. You could think of us as a social media platform, a commerce platform, a digital wallet, a creator economy, all in one place. Didn't start out like this. Took me a long time. In the beginning, I was a content creator. All I wanted to do was aggregate solutions where I didn't have to sell a specific product. I realized quite quickly there was something far larger than that. And when I realized building closed loop systems could be the future of the economy, particularly when I saw us coming towards the end of the existing financial system, the petrodollar, I believed the global hegemony and open market was going to change. I did a video on it, went viral 4 years ago. And as it turns out, now you're seeing countries saying we must look inwards because we can no longer rely on the existing rules-based order. So you're going to find ways that countries are going to want to keep their GDP inside their countries, give more money to their people, and extract the value inside those countries rather than the traditional system that extracts value away from countries or communities. That links to two different routes that we go in. Obviously, you've got the traditional venture capital route, which makes us more like a typical social platform, but franchising closed loop systems, whether that be through digital wallets, community platforms, where the communities are already there, but traditionally the value is being extracted. I always use the phrase, ask yourself the question, when your mum, your dad, your sister, your brother, your best friend buys anything online, do you earn any money? No, you don't. It gets extracted into the existing financial system. Well, why would you want to do that when you could extract the value into the community that you're in? You could look at that on a community level. You could look at that on a corporate level, like a digital wallet, which has many, many users, or you could even look at that on a national level. I have a fabulous team. Myself, I worked in technology and finance. So I was the most viewed financial educator in the Middle East on social media, mainly on TikTok, and worked in several businesses. My COO, I would not be able to do anything without her. She's got 5 degrees, 2 masters, a PhD. She used to write the policies and procedures for the Australian government's technology. Absolute legend. And my good friend Sam, who's the technical director, he has a team in Nepal, and has worked for over 15 years in the technical space as well. Cap table, we're looking to raise $500,000. It really is a seed extension to prove the concept even further. And we are currently raising direct equity at $80 a share, I think, in 7, 6, 5, 4, 3, 2, 1. That's pretty spot on. Look forward to your questions.
Thank you so much, Nathan. Nelson, please.
Thank you. So appreciate that, sticking to the time and to the deck that allows me to make the most of the questions. I was writing out last time when I was looking at this. So part of my background is in blockchain. I've seen a lot of projects whose community users basically go away when you stop giving them incentives to stay. And that's when you know if you have a user base. It's like if you stop paying people money to stay, do you actually have a user base based off the product you're delivering? Yeah. So the question I have here is, what kind of evidence, let's say, either in your model or in similar projects, do you have that the users will stay once the incentive-based engagement kind of drops off? Because at some point, I imagine it'll have to drop off. Otherwise, if you want to scale this to millions of people, it'll just become too expensive. So what makes you confident that users will stay on the platform once the incentives at some point start dropping off? If at all, that's taken into account into the unit economics.
The incentives never drop off. The value proposition, the existing financial system uses marketing channels to drive money out into the system, whether that be through Google ads, TikTok ads, Amazon, however you want to do it. The idea is, rather than giving money that users in the existing financial, let's say the digital marketing world, which is a $3 trillion market, the money stays inside the system. And originally, you could call us the ultimate dropshipper. We've got 12 million products, 20,000 different affiliate solutions. And then obviously we charge up a proportion above the normal value. And then, the creator earns a piece of the value, and then the referrer earns a piece of the value. So the referrer is a lifetime value. They earn off every transaction of the piece of community they bring. And all that they have to do is to maximize their value, is to continue to keep creating content or referring people and adding value to the site. The idea of that is also to tokenize the exact value proposition of what every user brings to the platform, and then keep that inside the system. Then obviously once you start earning inside the platform, before you have the ability to cash out into the existing financial system, you're given the option to say, would you like to spend the money inside the system now before it turns into existing cash? And you can spend that on all products and services based inside this type of economy, this type of country. So therefore, in turn, you're taking the value away from the existing marketing system, giving that back to the people, and then ring-fencing GDP to the country of origin.
This is a follow-up, just yes or no. Do you plan on incentivizing people the same regardless of how many users you have?
Regardless of how many users, what do you mean?
Correct. So let's say your incentive plan, what the users get out of engaging with your platform and out of bringing more people into the platform as well. Is it going to be the same whether you have 1,000, 10,000, or 1 million users? So it's lifetime. What they're paid off for using the platform.
Correct. And based on the value that the person brings to the site. So if you've brought one person to the site and that person keeps spending, you're going to earn off that one person forever. If you brought 10,000 people to the site, you're going to earn off those 10,000 people forever. Now you are incentivized. And the percentages, they're fixed already based on your rating, which is driven by you continuing adding value to the platform.
Okay, understood. Second question, more of a follow-up. I'm going to scratch my second question. I'm going to make a follow-up to this one. So your model depends on people. So your model depends on keeping this value within the ecosystem. Correct. How do you prevent on this scaling part, let's say in 2, 3, 4, 5 years, 7 years, how do you prevent like the platform economy to become super expensive once you onboard, I don't know, millions of users? Because the economics of running a platform with millions of users is different than the economics of running up to 10,000.
Of course. The reality is, if let's say you're a platform like a Shopee or an Amazon, they still have their existing acquisition costs. If we've got an ecosystem that's moving, typically in the beginning, we'll have like an AliExpress where we have to charge a higher percentage, which means we, in theory, going to be more expensive. But as we create that value inside the system, our customer acquisition cost reduces lower and lower to closer and closer to zero. So the platforms are naturally going to want to integrate with us at the same prices that they have and pay us the commission, which they otherwise would have paid an existing financial system, the existing digital market model.
Okay. I have more questions, but I don't want to overlap with the time of others. I'd be happy to connect with you after this because the model seems interesting. It's linear, easy to understand. I just have questions of kind of which direction you want to take it. But thank you so much.
Perfect. Thank you.
Thank you so much, Nathan Nelson. So we move our second funder. Anders Divun, CEO and co-founder of Swan Home Technology, Stockholm, Sweden, is the headquarter, IoT, AI, WorkTech, HW, enable SW is the sector. A pre-seed of €650,000 for 50% stake in the company, post-money. How's it going, Anders?
It's going very well. Thank you, Maximilian. Happy to be here tonight and have the chance to present Swan Home Technology to you. First, a couple of words on myself. A long background in the vehicle industry, working for more than 20 years within Scania in different commercial and strategic positions, and then moving on to building my own venture. And since a year back, exited there and came into Swan Home Technology. So that's my background. So moving on a little bit to the actual company that I'm representing. So Swan Home Technology is bringing intelligent workwear for high-risk environments. Our mission is simple. We want to save lives. We do this by turning mandatory PPE into an active, intelligent safety system. The problem is both large and concrete. Serious workplace accidents happen constantly, and falls represent a major share of those accidents. When a worker falls or becomes unconscious, traditional PPE does nothing. It gives visibility, but it does not detect, react, alert, or escalate. That creates a dangerous detection gap, the time between the accident and the help. Swan Home Technology closes that detection gap. Our ecosystem combines 3 parts: the Swan Home Sense Collar, the Swan Home Proactive Light, the Swan Home Sense app, and the collar provides the AI-powered fall motion detection. The printed light gives active visibility without a glare, and the app manages the alarm routines. The system supports 3 types of alarm: the AI-triggered one, the manual, and timer-based. The sense collar is the brain of the system. It's fully integrated into mandatory PPE. It works with on-device Edge AI and is future-proof through over-the-air updates. So how does it all work? The worker's mobile phone is automatically connected to Swan Alert Vest via Bluetooth. The sense collar detects a fall with industry-leading accuracy, and a message with an exact position is sent to emergency contacts and/or an alarm center. And again, the alarm can also be triggered manually or set on timer. The market opportunity is significant. We address a global PPE market estimated at around $160 billion. Within that, smart PPE is a fast-growing segment. The timing is great since safety, insurance, ENG, and regulatory pressure are all pushing for more proactive worker protection. Swan Technology is already trusted by strong industrial brands, and we have had sales in 5 EU countries. We have customers across several industries in real operations, not only demos. The big Swedish construction company NCC is a good example. See our solution as a part of a broader health and safety culture. The value is not only technical, it's operational, cultural, and financial. Today, our business model is primarily hardware sales. We sell complete alert vests, the collar itself, and replacement vests. Already next year, however, we will add recurring revenue through service subscription and API-based integration. Our go-to-market is focused and partner-driven. We continue direct sales in selected target segments. At the same time, we build partnerships with PPE and workwear manufacturers, rental companies, and alarm centers. We start in the Nordics, and then we expand into Europe and Asia. The roadmap is built around 2 priorities. First, it's a broader product fit, and then recurrent revenue. We soon start developing the cloud backend and the API structure. In 2027, we introduce hardware and software subscription, and the strategy is to move from product sales to a scalable safety platform. The competitive landscape is fragmented. Wearables and watches may offer personal alarms, but they are not integrated into certified daily workwear. In many cases, our biggest competitor is not another startup or product. It is the market tradition. The founding team combines deep industrial experience with entrepreneurial execution. We have a long international corporate background with deep product and connectivity expertise. And we know how to scale hardware and software from idea to market with a strong customer and business model focus. Currently, we are raising 650,000 euros for 15% equity post-money. Gives us approximately 18 months of runway, where the main milestones are clear. We should reach 300,000 euros in monthly turnover at around 50% gross margin, secure a new distribution partnership, and introduce subscription business model. Majority of the funds go to sales and marketing. We want to move from early sales to scalable commercial growth. We believe that smart PPE will become standard in high-risk environments. Swan Technology is positioned to help to shape that shift, and we are looking for investors who see the opportunity to build new category in workwear. Thank you so much for presenting, and looking forward to the questions.
Thank you so much, Anders. Only be left to Nelson.
Thank you, Anders. Very interesting product. It's also very clear to me the advantage of it. I started my career at Continental, which is an automotive company based off of Germany. And so I understand very well kind of the manufacturing setting where this would be a very, very useful piece of tool. Another thing I understand is that safety is a very conservative market, let's say. Who in your mind controls the buying decision, and what makes you confident that this can become a scalable model rather than a series of enterprise pilots, let's say? Because often what happens is before they onboard fully as a provider, you have to deliver, be a pilot for some time. So if you replicate this across potential customers, you might be looking at, you mentioned 18 months as your runway, the next 18 months, best case scenario, just running pilots. So whether within that 18-month scope or outside of it, what makes you confident that this can actually be a scalable product serving millions of articles per year at some point, rather than being dependent from consecutive pilots from enterprises who, as I'm sure you found out by now, have long turnover cycles as well before they onboard something, especially around safety.
No, I'm sure. I think the question is really relevant, and it is one of the challenges naturally, and especially when looking at really big organizations. I think there are several parts to this. One is, of course, to also actually address segments where the decision making is much more decentralized and smaller units. We have, for example, the transport and logistics industry, where, for example, the classical hauling company where decision can be made fairly quickly. Blend that with also working with more project-related financing, because a lot of the project financing, even in infrastructure organizations and construction companies, for example, are quite decentralized in those specific projects. So a lot is, of course, to create the first confidence, and we also need to collect a little bit more of positive bads, basically incidents on the field where we really prove that this is saving life and reducing costs. So we see that from the first customers, but you are correct in that the bigger organization, it will take some time, and we experience that lead time for decision is one of our key challenges. Final word on that is that we have quite good knowledge about how to work with decision making in larger organization, coming from leading positions within Scania, being one example of that type of organization where decision takes a little bit longer.
Then I have another question. This is why I like pitches. I had a second question, but I'm going to scratch it because this is a more important one. If you know and you have experience in these decision-making processes in big corporations, especially around safety, then like me, you also know that at the end of the day, as a business.
Sorry, I'm losing you a little bit now, Nelson. Sorry, can you repeat? Is it only for me, Nelson is frozen? Or?
Yeah,
We're back. Can you hear me?
Yes, now
I can hear you, but unfortunately I had maybe 10% of the question. I'm sorry for that.
That's the time we have. Thank you so much. No, I'm kidding. So basically what I was asking you was, corporations, as anything else, it's a business. So they are looking for ROI. How do you make an argument for ROI, or is there an argument for ROI in your product, rather than just quote unquote, the moral argument of preventing accidents, which in an ideal world, their argument should be enough. But as a business, everybody's looking for ROI on every dollar they spent. Have you figured out what your argument is on the ROI front specifically, in terms of when you pitch to corporations?
Actually, anyone sitting with the numbers of absence in a workplace knows that this business is a quite easy one to calculate back, actually. And there are examples at a website for with figures and numbers so that you can see it. But it's clear that the absence, that the work-related incident that were not taken care of in a timely manner cost a lot for the company.
Okay. See, I always like to ask these questions, like two challenging questions and one to let you shine. So if everything goes right and you become a leader in this category, let's say, because I really think your product is interesting, I think there's market there. I'm also happy to connect you personally to Continental, if you're not connected already. I know a couple of their heads of security back in Germany and in Portugal as well. I think I would be interested to at least hear your, a case study. But my question is, if you become a category leader, what are you a leader of? Is it the PPE technology? Is it the data layer behind and the infra behind the vest as an equipment, as a physical equipment, or something else? So which lane do you see this becoming really interesting 5, 7, 10 years from now? And what will you truly own? Because the vest is not the product. The vest is a vehicle for the product.
Absolutely.
So is it the technology? So in which that space, or is it the data, for example, or something else? Because there's a lot to be explored and money to be made in either one of those, or maybe a third rail that I've not thought of.
I think that the rail is probably a little bit of the third, and it's exactly in between, because I think that we should be the sensor layer in creating the data for someone to actually refine, because there are a lot of good surveillance system, there are good of safety system, but they lack some really edge data, and there I think is our real core to collect and present that data in an actionable manner to the ones who actually then also present it in a more, we won't realistically become that platform that everyone goes to, but we can feed those platforms that are there and very strong and performant already.
I agree. You have a lot under the vest as a product that is also commerciable and monetizable, and can help a lot of the industry, because at the end of the day, I would even say maybe in 5 to 7 years, the vast majority of your customers might not buy the vest, but might buy the data to make improvements in their own processes based on the data you collect through the vest. So there's also very interesting application. Congratulations. I think you have something really cool here. That's it from my side, actually.
Yeah, thank you. Yeah.
Thank you, Anders Nelson. I'm moving to number 3. Steve Tabel, Chairman, Gravity Power Inc. in California headquartered. Its energy renewables, a B round of $2 million in USD. How's it going, Steve?
Very fine. Thank you, Max.
Thank you so much for coming. I leave you to pitch and Nelson to follow up.
Okay. Are you showing my slides?
Here we are.
Yes, I can see them.
Okay, great. Thank you. My name is Steve Tabor. I'm a renewable energy veteran. I've been in the space my whole career, been in wind and solar, behind the meter, energy efficiency. I've done manufacturing, project development, public policy. I'm here today to talk about gravity power and bulk energy storage. Energy storage is a key enabling technology for decarbonizing the electrical grid. If we're going to mitigate climate change, we have to take fossil fuels out of electricity generation. And that means energy storage, because when you turn on your TV, you can't make the sun shine brighter or the wind blow harder to power it. So we have to be able to store energy when it's abundant and then deliver it into periods of peak demand. Gravity power is the only energy storage technology, to our knowledge, that is low cost, minimal environmental impact, high round trip efficiency, has a tiny footprint on the land, is easy to site and non-controversial, has a high domestic and local labor content, is low tech risk, and is ready to scale. And for an industry which needs a lot of energy storage, that is a very compelling value proposition. Everything which goes into a gravity power plant is a commercial off-the-shelf TRL9 technology. We dig a deep shaft in the ground, we line the shaft with shotcrete, we put a steel-walled piston in the shaft, we fill the piston with the stuff we took out of the hole, we put in a conventional hydroelectric penstock and powerhouse, fill it with water one time only, and that's the system. To store energy, we pump water down the penstock, hydraulically lifting the piston in the shaft. To generate energy, we allow the piston to descend. The market is quite significant. There are currently 167 large bulk energy storage projects in the world. We need to build a couple of thousand more of them in order to decarbonize the grid. That's $1 trillion market. So why gravity power? Well, first of all, cost. Electricity is a commodity business, so levelized cost is all important, and we have the lowest levelized cost of any storage technology. That in most applications, that includes Form Energy, which you may have read about. That's the new company backed by Bill Gates, which located in West Virginia. We have a very high round trip efficiency, industry leading. We have a tiny footprint, as I mentioned. This is a typical energy storage project. It's in Southern California, stores about enough energy for 1 million people, occupies about 5,000 hectares. This little blue rectangle is the footprint of a gravity power plant, which stores the same amount of energy on about 12 hectares. Once a gravity power plant is built, there's essentially no significant environmental impact, no hazmats, no fire explosion risk, no air quality, water quality, wildlife impact, no water use. It's quiet, it's visually unobtrusive. All of this means that gravity power plants can be deployed almost anywhere without the local opposition, which usually blocks energy projects. I want to talk just real briefly about our industry alliances. We have a number of world-class firms on our team. I want to draw your attention to Stantec, one of the top 10 engineering firms in the world. They design power plants for utilities all over the world. They conducted a feasibility study on the gravity power technology, which is available if you want some bedtime reading. And executives at Stantec have invested their personal funds in our company. We have recently designed a proof of concept plant using grant money from the U.S. Department of Energy. What we need to do right now is raise the money to build that test facility. There's a couple of ways to structure this. One is with a skinny first tranche of $2 million. We get $600,000 back of that, which goes to our investor in tax benefits. Our business model is very capital efficient, designed to be very capital efficient. We will not own these plants and pay for them, so we will need no internal capex. We will license the technology, provide the engineering support, enabling our customers, the utilities, to own and operate these plants. This drives a very high gross margin. It's almost like a SaaS company with excellent investor returns. The second way to structure this would be with a larger first tranche, which would increase our speed to market. So to sum up, when I look at the clean tech investment space, there's a lot of opportunities out there, but most of them offer only incremental change in terms of saving the planet. In contrast, gravity power is a rare opportunity to really move the needle on climate change, achieving a very significant global outcome and doing it with a very lucrative business model with low tech risk and with relatively little capital required. Thank you.
Thank you so much, Steve. Nelson, please.
Thank you so much, Steve. I actually spent a good time and had a very learning moment or teachable moment yesterday, learning more about your technology. One of the things that stood out to me is that, and specifically on this vertical of energy storage, the space is a little bit crowded, it seems to me. What piece of technology around energy storage are you particularly worried about? And what's your edge against it specifically? First, on the storage front, we'll go to the other part in a minute.
Okay, so the storage space breaks down into market segments based on duty cycle. There's short duration, then there's daily generation shifting, and then there's very long generation shifting. We fit nicely into that middle daily generation shifting market segment. And in that, there's really nobody that offers the value proposition that we do. When you get into the very long duration, there you want a low capex, high opex technology, such as Form Energy. So we did an analysis recently which showed that if you're powering a data center, your optimum mix is like 100 hours of very cheap, low capex, high opex storage, such as is made by Form Energy, with a gravity power plant, a low levelized cost technology at the top of the dispatch queue. So you have this big battery so that if the sun doesn't shine, wind doesn't blow for a week, you can get through it with your deep 100-hour battery of Form Energy. But for your daily generation shifting, where you need to have high round trip efficiency, gravity power saves you a ton of money. A typical data center might save $750 million over its lifetime using that dispatch stack that I just described.
Okay, understood. Thank you. Clear. Now, this I do know. Typical infrastructure investors, well, everybody, but in infrastructure specifically, care about repeatability. Yeah, so how much can this scale by repeating this one solution that you offer? So thinking about the repeatability topic, what milestone from your commercial, let's say, from your first commercial delivery, would convince an investor that this is repeatable? Yes. So let's say some government grid or utility operator to buy in at scale. What numbers or what proof would you be able to show from one delivery that this is scalable? Let's say, for example, at a government level, where I think a good opportunity for you here is probably B2G contracts. So instead of, how many units or what kind of energy generation capacity would you achieve, that would show that a government, for example, would be a potential customer for you?
Well, in the United States, most electricity generation is done by investor-owned utilities, and it's my understanding, Nelson, that even in countries, for example, in Europe, where electricity was historically generated by the government, those entities are increasingly being privatized. EDF, for example. The real challenge for electricity is a very conservative industry, and for very good reason. Electricity lights, you have to keep the lights up. And so utilities that generate and sell electricity tend to be very conservative about new technology. So the big hurdle for us is not repeatability. The big hurdle for us is getting that first one built. There's a saying in the utility business that everybody wants to be first to be second, but being first is very hard. So that's the hump we have to get over. And that's the reason we need to raise money right now to build this proof of concept pilot plant. And that's not help that we can expect to get from the utility sector in the United States. Now, we were on a grant program to build this thing with money from the federal government, and we used that money in the first phase to design it. And then the second phase was sadly canceled by the current administration. Don't get me started on the current administration in Washington.
Our time is limited, and I feel both you and I could go a long time on that topic. But then, what milestone? In that, I believe we see eye to eye, is what I mean. But then, what milestone from let's say you launch a commercial project, yes, and you land one. What would convince? Like, what would you show and point at and say, "See, it works"? What would you show as proof of work? Not proof of concept, but proof of work. That a utility or grid operator, private or governmental, to buy a second one. Yeah, so imagine you land a contract, you deliver, the project is concluded, everything's up and running. What would be observed? What the success look like? What would be an observable outcome that would convince that same customer to buy a second one?
The physics of the grid drive the need for energy storage. And utilities, even though the current administration in Washington is hostile to this, at the state level in the United States, state governments are still driving the decarbonization of their electricity supply. So the utilities know that they're in a situation where they need to procure energy storage. Right now, they've got a whole bunch of really lousy choices. And the dominant technology in energy storage is pumped storage hydroelectric. That's a technology where you have two reservoirs, one up high, one down low. You pump water uphill to store energy, let it flow downhill to release energy. Utilities love that. It's got a 94% market share globally, something like that. The problem, though, is that those projects are very damaging environmentally. If you've ever been to the Alps, you know what I'm talking about. And because of that, it has not been built outside of China in any significant quantities for a generation or more. So the utilities know that they have to procure energy storage. And right now, just out of default, they default to lithium-ion batteries. But lithium-ion batteries is a terrible solution. They're expensive. They have an unfortunate tendency to explode and spew toxic waste all over your neighbors. And they wear out in about 12 to 15 years. But the people that are making the decisions, the buying decisions right now in utilities can default to that because it's like nobody gets fired for buying IBM. That's the idea. That's why lithium is getting so much market share right now, but it cannot last. So what's going to drive utilities to buy repeated portfolio, buy fleets of gravity power storage plants is the fact that once they get one and they see it works, it's going to be making careers all over utilities. It's really the only technology we see out there which gives the utilities everything they need: low cost, minimal environmental impact, and ability to scale. Because we are environmentally benign, because we are not controversial, we don't take up a lot of land, we're easy to scale up. And that's the challenge ahead of us. As I mentioned before, this is $1 trillion market. We have to build a couple of thousand big energy storage plants. And we seem to be the only technology out there which can scale up in that way. So the physics are going to drive it, but I think we're well positioned to capture a market share. Did I answer your question?
Yeah, for sure, for sure. You mentioned something there about careers. I mean, if you're looking for government grants, try to figure out a way to claim it'll create jobs, because that's usually a good shortcut for some government support. But I see your point. I have one last question, and then just a sanity check from my side. But last question that I really don't want to miss. So if this succeeds at scale, and this is similar to the last question I asked Anders, 5-7 years from now, because I also think there's a lot of potential underneath just the physical infrastructure that is a vehicle for something else. If this succeeds at scale, best case scenario, where would you like to take this? Do you see yourself as a project developer to install the machinery? Do you see yourself as a licensor for the technology, and you're not involved in the physical setup of the infra, you're just licensing technology to third parties? Or maybe a critical piece of global energy infrastructure. But which lane do you see yourself taking this 5 to 7 years from now? Because like with the previous project, I think there's multiple lanes here where potential really is. So do you see you guys as more like project developer, selling, installing the technology, licensing the technology, but that's where you hand off, but then it's easier to scale, or some other piece in the puzzle of global energy infra?
Yeah, thanks. Great question. So we think that we don't think we should own these projects because that limits our ability to grab market share. There's a whole bunch of big companies in this space, the big utilities, Berkshire Hathaway and Nextera and E.ON and EDF, and a whole bunch of large companies, and they know how to write big checks. They know how to permit big projects. They know how to operate big projects on their grids. Those are all learning curves that we don't need to climb up. Our expertise is in this technology and how to deploy it. So we want to provide the technology and the engineering expertise to enable companies like that to own and operate these plants. That's the way we get market share. That's the way we maximize our market share. Now, in terms of on the revenue side, just to kind of electricity, as you probably know, the wholesale value of electricity is very dependent on time of day. In the middle of the day, when the sun is shining, or in the middle of the night, when the wind is blowing and nuclear plants are operating, electricity is dirt cheap. In the United States wholesale markets, it's often priced below zero, and we can talk about why on another occasion. On the other hand, during peak periods, which is typically in the late afternoon, evening, when people come home from work and turn on their TVs and start cooking dinner, that's when the price of electricity spikes up to 15, 20, 25 cents US, similar euro cents. And so the value uplift from a gravity power plant is you take this dirt cheap energy, might be averaging you like 2 cents a kilowatt hour, and you're selling it at 20 cents a kilowatt hour. So that value uplift is what pays for the investment in a gravity power plant. Our tech license fee is typically 1 cent per kilowatt hour, as opposed to a value uplift of 10 to 20 cents per kilowatt hour. So from our customer's point of view, our technology looks dirt cheap. But from our point of view, that 1 cent per kilowatt hour is fabulously lucrative. So we want to make this thing, we want to maximize market share. We do not aspire to own these things. We would if we have to, we will if we have to, but basically what we want to do is we want to get this out there in the environment, into the industry, so that we can maximize market share for our investors, and so we can maximize impact on grid decarbonization for the environment.
Okay, clear. Just one question. That's more of a comment than a question. I think you mentioned in your pitch you're raising Series B, correct?
Correct.
Yeah. Just a technicality. consider reviewing that, because typically Series B is for growth, when a company already has a product, has product market fit, has traction and revenue. And the point of a Series B raise is to give me more money so I can do more of what's already generating money for me. Your stage right now is before going to market with your product. So just at face value, if I only skim, which most investors will do, through 3 or 4 slides, reading Series B, that nomenclature specifically for investors in our minds, yeah, just a little detail there. But otherwise than that, more than fine.
May I communicate with you offline on that subject?
Yeah, for sure. Yeah. Ready to go to the next one. Thank you.
Thank you so much, Steve. Stay because shortly we'll bring you back. So we move to our, of course, not the last part. It absolutely not the least founder. Pina Bazar, co-founder of Sato Lock. Turkey is the quarter. I'm avoiding the name of the city because I know I will destroy it. Sector artificial intelligence, enterprise SaaS, AI infrastructure, multilingual AI, and future of work. It's a pre-seed of 300,000 USD. Thank you so much for coming, Pina. If you want to give a short intro to yourself, and after go straight to page, Nelson will follow. Thank you.
Yeah, thank you. Happy to be here. A quick background about myself. Well, I've been on content and marketing for over 8 years now, and on AI orchestration and marketing for some time. Well, after winning a grant from She's Mercedes by Mercedes-Benz, we started this amazing Satolog journey. So let's see it together now with a quick video that we will be presenting.
Pina,
I
can you
think
hear
we
me?
are back to, yeah, I can hear you.
Yeah.
I think
You
we
can
are
start.
back to, yeah, there was a delay in the video, no worries. So, yeah, thank you. So I think, so to start, the internet and the workspaces, we all have built our businesses on are currently quietly disappearing or getting broken. Not the website itself, but the visits or the customers, basically the revenue from the customers at the same time. And currently, things, well, I would say approximately 6 in 10 searches on the traditional search engines now end without a click. So customers decide whether to trust you before they reach your page, and usually in a language that you don't even speak or that you don't even support. And at the same time, inside our organizations, we are running between 5 different tools just to get a single project out the door. And the era is changing for sure, and we are the first-hand witnesses of AI becoming a very close partner of our workflows, but at the same time, our workspaces should change too. So for this one, in Satolog, we are building an ecosystem. So the inside product is recently soft launched. It is our content, SEO, image generation, design studio, localization, and publishing. They're all in the platform. And for Rasnos, it's currently in closed beta. It is our local first workspace where local AI or server-based AI. So basically, you can bring your own key or you can use local AI. and it assists across your whole team. And underneath this, we have Omerta Brain, which is at the same time our local AI and also the memory of your organization. So discovery is one of the keys for the brand to be visible and to generate customers, as just as I mentioned in the beginning of the slide. So, but discovery is combining the traditional search and AI answers, and we all know that and aware that Reddit is one of these top sources, those engine side. LinkedIn is also, and some other platforms too. And currently, how we do work is also moving from scattered apps to content-rich workflows. However, 72% of marketers, they still say engagement is their biggest problem, even though we have too many tools, we have too many AI in the pipeline that's helping us on the marketing and on the workflow optimization. So that means most tools, many of them didn't really fix the quality and customization that brands need. So a global team currently runs 3 agencies, 5 tools, and gets very low consistency, and they can't even justify the revenue. So the generic AI, it runs off-brand because it is difficult to keep it consistent, as the generic AI has context limits as well. So translations, they lose voices. SEO completely in a different dashboard. They completely in a different workflow. So, and what customers tell us based on our experiences, they need one system that remembers their brand, writes across languages, and keeps the work organized. So in the ecosystem, we build it. And inside today leads with content marketing, and Rust nodes expand the surface to an ecosystem of co-working and project management space, completely running on your local. And for Rust nodes, I will for Rust nodes, it is where things get bigger because it's the only app you will open on your laptop. It's completely local first. It is Rust powered, so it is a workspace OS. And you can set multiple organization, chats, documents, code, co-work. You can design, you can video edit, you can do meetings, mail, code, and shipping. So it is you can utilize local AI. We are supporting several local AIs plus Omerta Brain, or you can bring your own key. And the thing is, the AI, even local or server-based, it has access to all of your workspace. So even using local AI, you can still use it offline. You don't need to be connected. And if you don't connect cloud, your data stays yours and nothing leaves your laptop. So when we look at the growth here, we are an early stage, and we didn't launch Rust nodes yet, but it is in a closed beta, but we launched Satelloc Insight as soft launch. So even though we launched in February 2026, we were able to get our international revenue up to 3.6 with a client from major banks and with a client from e-commerce, consultation, and also crowdfunding. So basically, I'll put it that later. So basically, in the competitor space, what we see is everyone else solves a piece. RED isn't actually one feature or one platform. It's the connected system and our investments on local AI and offline solutions. Because now, if we look at China, so what we can see is there's a trend and shift investing more on local AI. So we are raising a minimum of 3,000K. On an achieve to achieve a reachable growth, and at the same time scale Rust nodes through 2026 to more enterprise and markets and invest on GPU. That is our biggest need. So we are a lean team with execution across fintech AI with over 10 years of experience on our development and AI part and on content operations part. So briefly, Insight is our cash flowing wedge, but Rust node is what we are building as an ecosystem as part of it. Thank you.
Thank you so much, Pina. Please, Nassim.
Thank you. Couple of questions. So obviously the AI space is also super competitive today. Let's say OpenAI or Anthropic or Google launch a multilingual geo optimization brand memory capable or product next year. What's left? What remains uniquely valuable about you guys? Because again, especially in AI, and I've said this last time, I really believe all product is convergent. So, product as a differentiator between startups will be virtually non-existent in a couple of years. And the only real moat, the only real edge against each other is going to be distribution. So if a company with better and bigger distribution than you guys comes up with a similar product next year, what still remains uniquely valuable about you guys?
Yeah, since you asked about GEO, I mean, we have competitors in GEO space using AI and doing AI visibility analysis. But if you go back to the presentation, it is just one of our product suites. So that's what I wanted to highlight. We are building an ecosystem. So most of these tools currently, they're going to be wiped out. I think that is for sure. Like we are completely aligned on that because most of them are AI wrappers. That's why we are investing on the open source models and offline workspace as well at the same time, because the key customers that we have are mostly in compliance, finance, or fintech. So what they need is not only AI visibility or not only SEO. That is one product that we have built to address in this era. But what we are building apart from that is an ecosystem that is where it can't be replaced even by GPT or Claude, because they have to also shift their focus to local AI.
Okay, this is great. I don't think I've ever scratched so many initial questions because I have follow-ups. So you mentioned an ecosystem, obviously, and it's clear to me that you have several product lines, which is good to hedge against the market. But which one do you think is the true entry point to your ecosystem? And what evidence or what data are you basing yourselves off of to assume that customers will naturally expand to the rest of the platform rather than just onboarding that one product?
So
I know it's a compound question, but I hope it was clear.
No
I can repeat.
Yeah.
Okay.
So we actually went live with Satellite Insight because it was the easy win for us. And that is where we are getting the cash flow with the customers from several industries. And that is where we're able to expand the ecosystem to Rasnos because we needed the cash flow. So Satellite Insight helped us with the cash flow. But now with Rasnos, which is a complete solution and only platform or app that you will need to use on your laptop, we are not saying we will replace Slack, Notion, AI tools, and everything, but we are providing an alternative that can reduce the cost companies are spending on the token cost and still managing multiple subscriptions and multiple platforms at the same time. And eventually, Satellite Insight is going to be merged with Rasnos because Rasnos already has capability to do SEO, to do AI visibility, and to do web search. We even built an MCP on Rasnos, and we also connected it to Satellite Insight. So on Satellite Insight, currently, you can use Rasnos MCP, and you can do web search without any API key needed.
Clear. I'm looking at your deck here, just not to be asking to go back and forth on the slides. Okay, I have other questions, but in the interest of time, I would just like to ask, so you have the advantage that some here don't have, which is you already have a product out in the market. What customer metric gives you the strongest conviction that this can actually become a large platform in an ecosystem rather than just an AI tool? And I don't mean your capabilities or your products or what you're planning, that's clear. I mean, what are you measuring today about the customers you do have, behavior-wise or onboarding-wise or retention-wise or upselling-wise? So there's a bunch of stuff you can be measuring about the people that are buying your product. What customer data point makes you the most confident that this can actually become a large platform business like some of these other competitors you mentioned, instead of just another kind of one-off AI tool?
Yeah, I understand this might sound like two product lines, but eventually it's not. So currently so I will say with Satellite Insight because we are measuring the KPIs on customer end as well. What we are measuring over there is the impact of using Satellite Insight, their design, their content, their automation, AI orchestration, is the impact on their sales. So with an e-commerce, we achieved 2x of sales within 6 months. And that customer has been with us over 10 months. And the other customers we have been measuring how many new users depending on their industry, how many new users they have been gaining through the strategy, the content strategy they have built on Satellite Insight. So this also adds to the retention. So there we start looking at retention, and the minimum retention we have with the customers month. And then they convert to our agency system as well. So basically, Satellite Insight is not only a platform service that you log in and you do your own content marketing. No, you can also get human support. So that is where we add most value. So we are at the same time a human supported agency who has their own platform, and we are converting these people into Rustnodes as well to do the meetings first, because we don't need to use Google Meet for that, to do the communication, task planning, project management. So that way they also become a user of Rustnodes.
Okay, clear. No more questions.
Thank you.
Thank you so
Thank
much,
you.
Nelson. Pina,
Good
Pina,
answers.
stay here. We're bringing back all our funders. So, Pina, let's start with you. 10 seconds. Convincing Nelson to invest, any investors watching today. What do you have to say?
Oh, okay. So as I mentioned, the Insight is our cash flowing wedge, and it's already working for a major bank, consultation firm, crowdfunding company, and an e-commerce. But Rustnode is our massive ecosystem expansion. It's capturing the entire team's workflow locally and securely. So we are a lean, execution-obsessed team that grew our international revenue. So we already own the infrastructure and talent to win it. So you can be the one who backs us and run this journey together with us. Thank you.
Thank you, Pina. Anders.
Well, the timing for an investment in Swan technology is totally right. The market is moving from passive PPE to intelligent safety. Our solution is flexible, it's capable, and it fits into everyday certified workwear, which makes adoption practical and scalable. We have strong reference customer and a clear pathway from hardware sales to recurring revenue. So this round is about accelerating commercially. Swanholm is building the next layer of workplace safety that thinks, acts, and cares. So join us with that. Thank you.
Thank you so much, Anders.
you.
Steve.
Thank you, Max. So if we're going to mitigate climate change, we have to take fossil fuels out of electricity supply. Our technology enables that to happen without raising costs for consumers, without damaging the environment, without wasting energy, with a technology which generates tons of local jobs. It's also entirely domestic content. And we have a business model which can deliver exceptional returns to our investors. So all we need to do is get some help to get over the hump and get this commercialized and out into the market, start to gain market share. Thank you.
Thank you so much, Steve. Nathan, as you got less questions than others, and I believe Nelson still have one for you, we can go for it, and after you can give your statement in 10 seconds.
Sure.
If okay with Nelson, of course.
Absolutely, for sure.
So the question you asked was, if Clipsy succeeds, what fundamental advantage will creators have that they achieve on TikTok, YouTube, Instagram, or existing social commerce platforms? Okay, I'll use the easy example here, and it's an industry that I really, really hate. So, and that's been created by the existing system. So let's say, Nelson, actually, there's a few guys on here. What percentage of social media, what percentage of followers of social media accounts that promote girls in bikinis are male? It's 85 to 95%. Are any of those males buying bikinis?
I
No.
hope so. Otherwise, I'd be worried.
That created an entirely new industry, which we know now 1 in 8 people under the age, 1 in 8 ladies under the age of 25 in the United States are now involved in. Why is that? Because the value of the attention that they were creating is extracted to the existing system. But if they say, hey guys, you know what, I'm actually going to post stuff on Clipsy now. Everyone goes over to Clipsy. They start extracting value when their follower buys a cup. He goes and gets an orange. He buys a new TV. You've extracted the value there, and now she no longer has to go and promote herself in ways that she probably wouldn't have otherwise. It's bringing the value back to the people. And if that's the last question, I'll bring that back into what the 10 seconds would be, is the last 113 years have been driven for a financial system to extract value away from the people to a very small set of players, which essentially were the banking system, right? 13 banks. They grew into capital firms. That grew into the existing system. After Nixon took us off the gold standard, it's been game over since then, and extraction all the way. The next 113 years is probably going to be about bringing money back to the people. And the way do we start with that? We start where the attention lies. So if you can find a system where you can bring the attention back to the people, and they can take the value of their communities back to them rather than extracting the value into the existing corporate system, I think we may well be onto something.
Very clear. Thank you, Nathan.
Thank you so much, Annette. Now, if you want, you have 10 more seconds to convince Nessa to give you the money.
That was the 10 seconds at the end there, but yeah.
I think
it's much longer.
Yes.
That was the 10 seconds. If I get
he answered the question and then he gave the 10-second pitch.
Yeah.
So we can stay without 10 seconds?
You did well.
Go. We did it. That's all. If you want to close with any recommendation to our funders before we close the session. In case you have any.
Yes. Also 10 seconds. If you're going to pitch to investors, some of you did this better than others today, but try to take from the good examples you heard here today and absolutely make it crystal clear. Take your own 10 seconds to make it absolutely crystal clear how the investor makes money back from putting money into your project. Yes, how do we all make money together? Because at the end of the day, you cannot expect an investor with multiple narratives to be as excited or knowledgeable of your vertical and to infer what you don't say. So putting 10 seconds into saying, this is how much money I need, this is how I'm going to use it, this is how it's going to generate money back to me, and how I pay you back with interest, or how our valuation grows. So make sure to weave into your pitches 10 seconds to commit exactly to this. I need your money to put into, so it generates Y, which gets you your money back, and we all get, our own share back. So a lot of time was spent, which is good, on the product and the tech, which is what you guys know, is what you're passionate about. I expect it. It can be balanced a little bit by putting an extra 10 to 30 seconds on how we all make money together. Because my theses are mostly on pre-seed, seed, Series A. So I expect a certain level of stretch from my side to understand the math and how we all make money. But you do want to help yourselves by making it clearer to the investor, just by saying, hey, this is the math. This is where your money is going. This is how it generates more money to both you and me. So that's why you want to invest. So just try to think about that and weave it in to your own pitches, and you'll be doing great. Sorry, more than 10 seconds, but I think it's an important point to drive home.
Thank you so much, Nelson. Pina, Nathan, Steve, and Anders, thank you so much for coming. I enjoyed a lot, and I hope everybody did as well. For anybody who wants to get in touch with our funders, you can go directly to them. We give all the information, or come to us. We make a warm introduction. And everybody wants to come, pitch@equitymatch.com. That's the email. Thank you so much to everybody. Thank you.
Thank you.
Thank you so much. Appreciate it. Happy to be in touch with you all.